Asia-Pacific markets have fluctuated following a robust U.S. jobs report on Friday, defying earlier concerns about economic slowdown. The U.S. has seen job growth surge in March, exceeding expectations with 303,000 new farm payrolls and wages. The market reacted positively, with the Dow climbing by 0.8%, while the S&P 500 gained 1.11%. The Nasdaq Composite advanced 1.24%, while Asian markets responded with mixed results. Meanwhile, central banks across Asia-Pacific are awaiting interest rate decisions, with expectations for a steadiness and a possible rate adjustment from the Bank of Korea. All right, let's bring in Mazen Salhab, BD Swiss Chief Market Strategist in the MENA region. He joins us now live from Dubai. Great to have you here with us Great to have you here with us. How might the surge in U.S. job growth surpassing expectations impact global investor sentiment?
I think the answer is you can find the answer by the reaction of U.S. stocks, which increased on Friday. So I think the markets started to focus on the healthy growth in U.S. economy rather than on the perspective or outlook of the expected rate cut in the next month. So the thing is, as long as we have a U.S. economy, we have a stronger U.S. economy, we have higher wages, and we have higher job market, then the Federal Reserve is unlikely to cut the interest rate anytime soon. So this is usually should be having a negative impact on the stock, on the high risk asset. What we have seen on Friday was exactly the opposite, which means that the traders, investors started to realize that, yes, the U.S. economy remains solid, and that's exactly what matters more for long-term investors. Long-term investors are looking for a growth perspective, looking for the potentials in the economy rather than short-term effect by the interest rate. So I think right now we have a solid U.S. economy, we have a very strong job market. Then I think the Federal Reserve is unlikely to cut the rate maybe in June. We don't expect it right now, but we will not see the rate cut by more than 0.5 maybe right now. That's what the markets started to price in.
Mazen, how do you anticipate central banks' interest rates decisions in the Asia-Pacific region might influence regional economic stability and investor confidence?
I think cutting the rates by the Asian central banks will have like different impact. It will have short-term positive, which means that we're going to have stronger equities in Asia. But I think in the mid to long term, that's not going to happen, because cutting the rates by the central banks means that the economy is not doing really well. So I think in the short term, yes, we will have good and positive impact, mainly in the high-risk assets. But in the midterm, I don't expect that.
And Mazen, given the mixed response of Asian markets to the U.S. job reports, what strategies would you recommend for business operating in the region to navigate market fluctuations effectively?
I think right now the U.S. dollar will remain strong. This is very important. So I think the traders must hedge their positions against all other currencies, and anyone who is having a big trade with America, they should hedge their positions, because dollar index is still very strong, and it will remain strong in the coming months, considering that the other economies are not really doing well, and considering that the central banks will be faster than the Federal Reserve in cutting the rates. So I think we're still positive in America right now. European stock indices, I think, having more potential than the U.S. to grow, because the valuation in Europe is still better than the valuation in America, considering the economic metrics that in Europe that didn't increase much in Europe.
Okay.
And in Asia, I think Japan right now is remaining in good positions. But I think once yen starts increasing, then Nikkei will start falling in the coming months.
Mazen Salhab, thank you very much for joining us today.